Go.
Good morning, everyone, and welcome to the morning market preview and trade plan setup for Friday, September the 6th, 2013. We're just coming off of non-farm payroll. Had a nice little spike up to the naked VPOC at 63.50 and came back. We're going to get going in just one second. I need to get the disclaimer out of the way. This information is for the purpose of educating members who want to expand their knowledge of the business of trading. It's not for trading or investment advice. You and only you are responsible for the trades or investment decisions you make. Trading futures or any instrument involves a risk of loss. Please consider carefully whether futures or options are appropriate to your financial situation. Only risk capital should be used when trading futures or options. Investors could lose more than their initial investment. Nobody from Quantum Leap is a certified trading advisor. We are retail traders operating within a self-organized learning environment. Past performance is not indicative of future results. Any trades that you see in Quantum Leap are for education purposes. Please use your own discretion, your own trade plan, and do your due diligence. With that said, each morning we like to start our morning going through our key numbers. We do this so that we put ourselves in the mode of where the levels are that are going to be and just review where the trends are. After we do the numbers, then we'll start going through our charts, and we'll start with basic charts and the monthly down to the intraday trends on the different time frames. But let's get the numbers going. Our year high, of course, 1705. We're way above our year low and our year open, so they really don't factor in today. Our month open 1640 and a quarter, we're trading above. Our month high 1658.25, we just made new highs with the spike in the news. Our month low 1630.75, we have a previous month at 1685.50. Our previous month high is our year high, an all-time high at 1705. Our month low is 1624.75, and our previous close was 1632. So we're spiking up, and we're trading above our open and our low and our close right now. Our week open, we opened Sunday night at 1640.25. We had a week high that's now been put in higher at 1663.50. Our week low at 1630.75. Our previous week we opened at 60.75. We're trading right around there right now. Our previous week high, this is a number you want to keep your eye on today, 1667.50. It's also 2 ticks above the significant CLVN above us at 1667. Our previous week low, 1624.75, and our close, 1632.25. So we're trading above our low and close and right around our open from last month and just under our previous high, or week, I should say. Going down to the intraday, yesterday in Globex we opened up at 1654.75. It was higher again, so other than this one day that we had that spike down, we have been trending higher. Our Globex high 1656.50 yesterday, our Globex low 1650.50, and we opened the RTH yesterday at 1652.75. We opened up and then we went down and tested that lower area just above the Globex low and rejected that and basically moved up, and then we just went sideways the rest of the day. 2% probability for a normal day, and this is the 4th normal day, non-holiday that we had yesterday. So we came up and made that big move on the significant breakout day, the day before yesterday. Then we came up and just went sideways. It was a tough 2 days of trading, unless you caught that trend up. But yesterday was brutal, waiting for the high probability of breaking the IB high or the IB low never came. So it was a tough sledding. Our opening swing high 1655.75. Our opening swing low 1651 and a quarter. We had a 4.5 point opening swing. Not much smaller than our total initial balance, which turned out to be our day range. Our initial balance high 1658.25 was our RTH high, and our initial balance low at 1651.25 was our day low. Our 1230 number 1654.50. We know what the high and low was. It was our IBs. We closed at 1653 in the RTH, and we had a VPOC that we traded around at 1654.50. And again, our range was our IB range at 7. Our full session range wasn't much bigger at 7 3/4, and our Globex was tight as well. So very tight range after a very big couple of very big ranges. Our full session high was 1658.25, that IB high and opening swing high, and then our full session low was put in Globex, which was a 1650.50, which we never got down to. Our RTH range, a 20-day range, is 13 3/4. Our full session 16.6, and our Globex 9.7. Globex opened last night at 1652. We had a European cash close yesterday at 10:30. All numbers in here are in Central, 1654. Our value area high, 1656. Value area low, 1653 for a very, very tight value area. And we did not break the IB. Our extended session, 1653.50. Our extended session low, 1651.75, and our ETH close was in settlement was 1652 for a 1 3/4 point, which is just slightly greater than our 20-day ATR for the ETH. And then we had a little bit lighter volume, just over 1 million in the RTH, 1.2 in the full session. Going over to the daily report, this is what we use to put together all of our numbers. We create what we call a QLTP ladder, which is our Quantum Leap Trade Planner. This is what it looks like when it's put out into the room. We have a ladder above the close and below the previous day close. Gives us our news, a little bit of a work area, and then different numbers based on the different methodologies and studies that we like to follow. And in terms of the CHVNs, if you stuck around last night, Howard and I went through extensively how we put this together in the go-to from yesterday. But the significant number right now is the 1654.50. And above us is the 1670 1/4. And the CLVN you want to keep your eye on today is that 1667. But we'll go through this in our charts. Significant LVN was 1656.50. The naked crosses, we took out 52, we added 53.50 and 54.50, but those have actually been taken out overnight. Our naked VPOCs, we took out the 1652.50 and we added 1654.50, the VPOC from yesterday. News, we obviously had our non-farm and our Canadian employment. We have Canadian IV. It's not going to affect the market that big, I believe. And then we've got FOMC member. But again, we've got a lot of headline risk going into the weekend in terms of the summit and the situation in Syria. Next thing we like to do is to go through and look at our macro to micro charts, see where we are within the trend. Oh, something is. So I had some problems with my charts. I'm going to see if this morning when I came in and to check my charts, I have a big gap overnight for some reason on my paper money. I'm okay on my live account. Just they've obviously got something going on with their paper money. But in terms of the monthly trend, we are trading up in the middle distribution from last month and the prior month. We've got good slope and separation on the 9 EMA and the 20 SMA. Trend is very much intact on the monthly. Not even a danger now. In terms of the weekly, well, we have this potential head and shoulder pattern setting up. We came down. We had our first close of the year below the 20 last week, and then we've popped up so far this week, and we're now not just above the 20, but we're also above the 9. So the trend again is still intact, and we're starting to get slope and separation again on the weekly. Going to the daily. We'd come down, we started to trend down, and now we've come back and closed above both the 9 and the 20. and we don't have slope and separation yet, but could be coming off a consolidation and a move back towards the upward trend that we are following on the daily. If you look at it on a geometric chart, we've been following this upward fork for quite some time. Then we put the opposing fork in when we broke down below the lower line of the upward sloping fork. Tried to get back inside of that line, rejected it, came back down. I added this modified shift chart, and all three charts created an energy point, but we're kind of trading past that. But I'm still keeping an eye on this because of the fact that we had confluence between this area of 1678, 50 and 1679. So this, if we get above 67, 75 and 78, 79 is my upward target. Of course, we've got that naked microcomposite VPOC at 70 and a quarter as well, but we'll take a look at that at the other chart. Let's go back to the intraday and see where we are in the trends intraday. We had come down and we were consolidating and going sideways, and we've come up, and you can see this is the problem I'm having with my my chart. So I got to go to the current contract in order to get rid of this gap. I don't know what's going on here. Anyway, we've consolidated and we've popped back up, and we've got slope and separation to the upside. Why didn't it change for me? Let me just change this again to the current contract. There we go. And you can see that through consolidation on the 30-minute, we've spiked up. We're now creating a pretty big tech gap on the 30-minute, but we're getting slope and separation to the upside. So very much seeing an upward trend on the daily. And you can see here's our news spike. We spiked down, then came back up, and now we're coming back up on it again and coming up to this high. And that 63.50 is a naked microcomposite or naked VPOC. And we've got good slope and separation. All right, let's go right over to the composite chart. Yesterday, or the prior day, we had this big candle. It was a breakout candle. We broke out of this balance down here that we were trading around 37.50 and closed higher. We'd gone up to this 55, one tick below the 55, which was the microcomposite VPOC that was in this prior balance. And then yesterday, we spiked up. Now, I didn't have, we looked at this last night, and I drew this new two-day microcomposite VPOC because I wanted to see where the last price that we were trying to hold before we fell out of that balance and gapped down into this lower balance that we traded in for the 6 days. And you can see clearly that the microcomposite VPOC for those 2 days, or the most accepted price before we fell out of value or balance, was this 57.50. And you can see yesterday, I was looking at the fact that we'd blown through this 55, the microcomposite for the larger balance area, and gone higher up to the CHVN level. I was saying, well, is that just blow through, or is there a reason why we did that? Well, when I drew in the microcomposite, you can clearly see the reason we did that is the last price that we are trying to hold prior to gapping down and finding balance lower around the 37.50 is actually that 57.50. And then we came back and we settled in around the 1652.75, which was the balance between these 2 days, the most accepted price between the breakout day and the normal day of trying to hold value. So we were trying to hold value, and we held value pretty well last night. I was looking for a move back towards that 47.50. Jen and I were talking about it yesterday late in the afternoon. We were reviewing the trades. Since then, we've drifted back up into the 53 area and 56 before the news, and then we spiked up, and currently we're trading above that balance. The value area high for the 2 days of that balance is 62.50, and the value area high for the overall balance that we had up here is 62.25, and we're trading right around that right now. So if we break out of this balance, we have a naked VPOC above us at 63.50. I know we went up and tested it in the Globex, but it doesn't count unless we go up and take it out in the RTH, and we'll take a look at that in the intraday chart. Above us we have 67. We've been talking about the 67 as the significant number above us. If we get above 67, we've got the naked microcomposite VPOC from these days in balance here, which we did not take out on the way down. We tested it on the way down, we gapped down, and then we tested it on the way up, and it still remains naked. So above 67, I'm looking for a quick move up to 60.25, and the other side of balance at 62.75. And we have this gap area between 81.50 and the the 60. What was the high here? The high 69.25. So if we get up in here, I'm looking for a continuation up to 75. And Howard's got his wave 2 target, in this area as well. And then we've got the CHVN at 77, and the energy point of those forks is right there, coming up into test the other side of balance at that 78, 79 level. And then the really big number above is the 1686.75, which was the overall microcomposite and most accepted price. Well, we traded up in this balance there, and the value area high on that is 92.50. The value area low is 82.50, and if we get above the 79 area, this would be the big magnet that I'd be looking to trade into. And of course, if we can hold value, then I think then we'll actually see. I keep saying that the 1705 top looked weak to me, and that this retracement was nothing more than a standard retracement. It did not violate the trend. It was not the end of the world. Everybody's talking about, okay, the high's in and we're going to come down and continue lower, and I just wasn't buying into it, just because of the fact that there was too much weakness on this high, plus the fact that we have to come all the way down to this 51 or the 1581.75 to even come down and test the trend line of the monthly. So all of this is just normal retracement. Let's take a look at the Globex, what we've done in the Globex, and then we'll move our numbers over to our intraday. We opened at the 52.75. We slowly drifted down, and if anybody was up last night, I was watching the football game. I was trading, and we came all the way down to this 48.50. The CLVN in the Globex composite. We had a Mr. Sneaky on the 15-minute, and we continue to work our way back up to that 55 level again, around that microcomposite VPOC at 55, then drifted back off down to around that 52.75, which was the balance that we found in the last 2 days, and then went sideways. And then coming into the news, obviously somebody had prior knowledge. I think it's just my own conjecture, but we drifted up into this area, up into the 57, 58 area, and then we spiked up on the news, hit that 63.50, came down, found buyers again here, and now we're drifting up towards that 62 or 63.50. So let's go take our numbers and move them over to our intraday chart that we trade from. This is my RTH chart, my regular trading session chart, and I just take my key numbers from my Globex and move them over, and then look to see how they fit in. Our overnight high, of course, is the 63.50, right on that microcomposite, that naked VPOC. Our overnight low is the 48.25. which is below the prior day, our normal day from yesterday. That was very balanced. And then our overnight VPOC is right around that balance, just below it, and right near that 52.75 microcomposite VPOC at 52.75. And 53 and a quarter. All right, which is right on top of a naked cross that we have as well. Naked cross is something that I watch, which is the 9 EMA crossing over the 20 SMA on the 5, the 15, and the 30. And it acts like a naked VPOC. It's unauctioned territory, and the market has a high probability of coming back down and testing, or coming up to test those levels where we have naked crosses. And we have a naked cross as well at down here, way below at 39. We have one at 41.50. But the ones I think you got to keep your eye on that we've had sitting up here is the one up here at 62.50. The overnight high 63.50, the naked VPOC at 63.50, and then we've got another naked cross up at 64. This area right here, the RTH high, is also going to be significant. If you bring in the profile day that I'll be watching today, which is the 826 day, you can see that the significant LVN between the double distribution day is right there at 59.50, 59.75. So, and that fits right into where we are in terms of the high on yesterday's profile. So I'm going to be trading off of that level. It's going to be a little bit larger level between 59.50 and 58 and a quarter. If we come down here on the open, I'm going to look to see how they're handling the 59.50 level, or if they come down all the way to 58 and a quarter, find buyers, defend the range from yesterday, and then bounce up towards this overnight high and the naked crosses and naked VPOC above. Above that, we have the 67 level. That is the area that I'm looking for the first possible resistance. That is that, let me get rid of this chart. That is the key CLVN, composite LVN, that I'm looking at 67. So I'll be looking to see how we react off of that, whether we come up and we reject that long-term rejection. If I'm already long, I'm going to be looking for it to blow through to come up into this 70 and a quarter area, which is my main target above. And then above that 70 and a quarter, the next level I'm looking at is the 72 and a quarter. And then above that, I've got the 81.50, which is a minor CHVN, and the close, that would be that gap close from above. And then we've got the 85.75 naked VPOC, and then the 86.75 naked microcomposite VPOC. So these are my between this and the 86.75, that's my extended target above. And then of course, we've got, if we come down to this this range high and the LVN from the profile day, and we get inside of yesterday, the value area high there is 56. I'll be watching that for a trade area. And then if we get through it, obviously we've got the target below, my main target below, which is that 54. And then we've got the overnight VPOC and the value area low from yesterday, 53. And of course, remember that the most accepted price for the last 2 days and where we closed around and held value. We held this perceived value here at 52.75. I'll be looking as my secondary target down here. And I'm not even going to put this on the chart because it's pretty obvious. And then the other area I'll be looking to do business is obviously the range low from the prior day. So my main hypothesis right now on the open, we're going to open up. We've got a roughly a 6-point gap going right now. So I'll be looking for them. I'll be seeing if we have any initiative sellers stepping in here and pushing us down back to test the range and come back into it, test the value area, and take out the naked VPOC and the overnight Globex VPOC. I'm not thinking we're going to see the overnight low, but you have to play into it. But if we come down here and we bounce off of the 59.50 and the 58 and a quarter level, I'll be looking for buyers to step in here, defend the open, and then move up to take out that naked cross and overnight high and the naked VPOC and the crosses, and a continuation up to test the other side of balance up there at 67. In terms of the Keltner, well, this fits nicely. The center line right now is sitting at right where we're trading at this 1660. If we get below, that takes us down to the 54 to test the Keltner. That is right where our prior naked VPOC from yesterday is. So that fits with the test lower. And then a move up higher to 65, 75 is going to take out these main targets above and go and test the, by the time we get there, we're likely to see the upper Keltner channel right around that 67 CLVN. In terms of gold, yesterday we talked about, wrong gold chart. Yesterday we talked about the fact that my target below was the former microcomposite VPOC at 66. I said if we couldn't get up and get back above the CLVN at 1399 and get back into the 1400s, that we're likely to drift back towards the 88, the 77.30, but the main target below was the 66. And we got down there. We went as low as 60. I think it was 64.70, which is unfortunate. I didn't take the long. I usually use an 11 tick stop. And if I would have, taken the 66 like I was thinking about doing, I would have been stopped out by 2 ticks on the first try. If you would have taken any of the subsequent chances down to 66, we went down there several times to test it, that would have held, and you could have got a nice move up. I did get a bit of this move, and I am running long right now in gold, after the news spike. So I got long gold, and I got long ES. I already closed out my ES trade, but I'm holding gold because I'm looking for a move back up towards this microcomposite VPOC at 1396, and that's my main target above. And then we get above there again, testing into that 1400, and then possibly a move up to this 1418 area. The main target being the 1390. CHVN. So that's what I'm looking at for gold. I think we drift higher today in gold slowly, and probably just come up and chop around this 96. I'm not really anticipating getting into the 1400s, but hey, if it happens, I'll take it. That's everything that I have right now. Let's shoot it over to Howard, and he can give us a look at the Fibonacci and the Elliott wave.
Thank you, Doug. So we'll just start with the weekly chart. So this is the current week, and we see that the prior 2 weeks were mostly constrained by the 9 EMA here in red and the 20 SMA in magenta. We did have a close below the 20 SMA, which was significant in that we hadn't had one for quite some time, as Doug pointed out earlier. This week has also been mostly constrained. We tested lower. Currently we're testing higher, so the key test of today is, do we have enough strength to stay above the 9 EMA, or are we going to drift back down into this same consolidation area and have the 9 EMA hold as resistance or not? So let's go to the daily. So on the daily chart, we, on our non-farm payroll news, spiked up and tested the 50 SMA, which is the highest moving average we have at the moment of the major ones we track. We had been respecting this 20 SMA on the move down as we were coming up until yesterday, today with the news spike. We actually tested up to the 50, and overnight we tested the 9 EMA and have a rejection off of that. So currently the overnight range has been constrained between the daily 50 SMA and the daily 9 EMA. In terms of Elliott wave count, so far my hypothesis, is still being supported by the structure of the waves. And what I'm seeing is that we have a wave 1, 2, 3, 4, and a fifth wave down to give us a wave 1. And we see a nice channel building, which is characteristic of corrective patterns, so that this is possibly in the formative stages of a wave 2. And I have a initial target here at 1664.75 and a secondary target of 1674.25. And that coincides pretty closely with the energy point that Doug had in his geometric chart. So we came pretty close with that spike up on the news. We got up to 1663.50, so I got within about 1.25 points of the initial target. So we'll let the pattern continue to play out. There's still a little more potential upside in terms of expected move on a second wave. But the structure of the second wave is very characteristic. It's channeling with a lot of overlapping wave action, very typical. So we'll just continue to track that and see if this hypothesis plays out. If it does, then somewhere in this target area here, we'll look for the pattern to top and then look for another move lower. But until that happens, we'll just focus on the structure leading to this second wave. And if it extends beyond here, we'll just need to continue to watch the structure and see if there's any adjustment required to the hypothesis or not. Take a quick peek at market breadth. So here we have the 10-day average of advanced declines, and ever since they hit their bottom here on the 19th, which was also the bottom for the up-down volume in the lower chart, we've been showing more market strength in forming this corrective pattern. These indications bottomed actually before price did. Price actually continued lower for another week and a half before it started hitting bottom and turning up. But thus far, we've, on both measures of advanced decline and up-down volume, moved above the 50% level. So we have more net advancing issues on a 10-day average basis, as well as more up volume than down volume on a 10-day average basis as well. So looking at the sectors, generally the sectors were higher. We have a couple of exceptions. Utilities continuing to show some weakness. It's taken over the seller for all the sectors that we're tracking here. Home builders, mostly flat. Consumer staples, mostly, it had been rallying a bit, but went flat yesterday. Did not participate. But the other sectors appear to be joining in on the price action. The Dow transports versus industrials. The transports are showing more relative strength compared to the industrials, and behaving pretty much as it has been for most of the year. So with about 17 to 18 minutes left to go till the open, I'll turn it back over to you, Doug.
Thanks, Howard. All right, so we're currently, we came down, well, Howard was talking. Let me bring my Globex chart over here again. We came down,
Actually, 7 minutes to open, not 17.
Yeah, we came down and came back down and tested the 59 level, right at that area that is key between 58 and a quarter and 59.50. We bounced off of it so far, and coming up to the 1650 level. We're back above the the center Keltner line, but we haven't had a close above yet. We need to close. We need to hit 61 to get the close above on the Keltner. So we're going to be opening up just above the prior day range, and I'm anticipating that they'll come down and test it. If that's if they've already come down and tested it, and it looks like they're going to go right for the 63.50 again and take that out, I might take a long. Right off the open. I'll have to wait and watch how they're handling the dome. But I'm anticipating, coming back down and testing this level again. This is going to complete our homework session and market preview for September the 6th, 2013. I want to thank all the visitors coming in. If you're interested in finding out more about the room, stick around for a minute, and we're going to do some live trading today, and I'm going to leave the room open again one more day. As always, everyone trade well, trade safe, and we will catch you on the flip side.